In this video update, I'm going to compare the Australian economy and the Australian share market with the USA and China to see where our best investment opportunities lie. The Australian share market has risen about 5% since February. Driving this move has been tax cuts in China, supportive budget talks, strong iron ore prices, and falling interest rate markets. Against this, house prices are now down almost 10% from their peaks. The question is whether this rally is the start of something much larger, or are prices just going through their normal swings and roundabouts? For the Australian market, we think the latter. The below charts show a 20-year history of some performance measures for our Australian economy. It shows a lacklustre picture of late when you look at job advertisements in yellow, which is showing we're getting fewer job ads than we have over the last few years. Consumer credit in blue, which is running at about 0 to 0.5% growth, which is very slow. The productivity line is in purple, which has risen strongly from year 2000, but has gone very flat over the last 2 years. And wages growth in red, which is trending above 0%, but very slow rate at around 2% at the present. In comparison, we are seeing a much stronger economic backdrop in the USA, where new jobs, which is shown in yellow, is running at 200,000 new jobs per month. The productivity line in blue is running at a positive 1%. Wages growth in purple is running strongly at around 3%. And the unemployment rate in red is still trending and holding at very low levels. And in China, performance measures are also looking good. Consumer spending in yellow is running at around 6%. The blue line is showing the service sector, which is in expansion. The purple line is showing confidence indicators, which is getting stronger. And the red line shows the manufacturing sector, which is also in expansion. So if Australia's domestic economy looks to be softer compared to China and the USA, you would expect that our market to be cheaper, right? This chart is showing that this is not the case. Australia's valuation level is the blue line, and we can see that it is basically in line with global valuations, which is in purple, but just below the green line, which is the United States. But what stands out to me from this chart is the yellow line, which measures valuations of emerging markets, which is still trading at a steep discount. So with lackluster economic performance and valuations that are relatively not as attractive as emerging markets, Australia's market is not screening to be the most attractive place for investors. This is reflected in our portfolio with a stronger weight in emerging market shares. And we'll talk more about that in future video updates.